Hi, I'm Blaine with Advanced Real Estate.
Hi, I'm Kyle, loan officer here at Fairway Mortgage in Crown Point.
Yeah, and it's February, and we're gonna talk a few things about this coming year and what the mortgage rates are gonna do and predicted to do, and
kind of
lay it on us.
Yeah, shed some light and be the voice of reason, right? You can read all the headlines and hear all of the quote-unquote bad or good news, but until you talk to somebody in the industry and truly get that quantification of what's going on, it's hard to say. The idea is that the cost of living is rising. The cost of borrowing money is also rising. And we can walk you through what that's going to look like. But just looking at numbers objectively, from the end of the quarter last year, 2021, into this early first few weeks even of quarter one, rates have steadily jumped up. And it's no secret. Go on any bank's website, not just ours, but any bank's website, and look at the rates. You're going to see anywhere from an eighth, a quarter, a half, 3/4 of a percentage higher in interest rates versus the historic. I just did a quick example on rates that were offered just shortly ago versus yesterday's, and I'm looking at on a conventional loan based on your credit score and down payment and things like that changes it. Looking at 3.25 last year versus 3.875 now. Now that's based on a 5% down, 740 credit score conventional loan. So that all changes if that's not your loan structure. But the idea is on a loan amount of $190,000, it's about $66 a month. And does that $66 a month make or break the file? Maybe not, but that adds up over 360 payments. Right. So we like to just discuss and start sooner than later. Okay, here's what's happening. 3.875, while it sounds like a high number compared to early in the year last year, and it is,
we were in the 2% last year and the year before.
Yeah. It's still lower than pre-COVID times where you were looking at 4.75%, 5% rates. So again, cost of living rises, cost of borrowing money rises. How do you kind of stay under that curb a little bit? It's start sooner than later. Talk to your agent, talk to a lender, whether it's us or otherwise, get that expert opinion and get those loan options on the table so you can see, okay, this is my rate now, this could be my rate later. How do I keep that low, and how do I keep my buying power up? Because houses are rising too.
Right.
So, and one of the biggest drivers would be mitigate your debt. Saving's important too, but don't take on more debt than you can chew, because their debt to income we see is one of the biggest drivers on how do I get pre-approved for more. There's ways to come up with your down payment and minimum programs and assistance, things like that, but debt, focus on that, start sooner than later. And we'll talk about where the advantages are in your credit profile to see, maybe this will work, maybe it won't.
Right.
Yep.
Yeah, I was just showing homes the other day and showed one here in Crown Point for $160 and then one for $200. The one for $160 is a complete gut remodel. Mm-hmm. Not only that, but the foundation was shot. Mm-hmm. Rotting joists and all that stuff that need to be replaced. So $160 isn't. I mean, and that shows what you can get for $160. It wasn't outlandishly priced for what it was. It just shows you what you can get for your money in Crown Point in this market.
Sure.
So you're looking at $200 minimum for a habitable. The one I showed for $200,000, mm-hmm. 3-bedroom, 825 square feet.
Okay.
Not much space at all.
Sure.
But it was remodeled. It was nicely done, mm-hmm. on a 1/4 acre, and backyard was decent, but not much living space.
Well, see, that's where having an agent's important too. While we can do the numbers side of it, we only see an oversight of what's out there in the market, where you guys are involved in the trenches, and you can kind of navigate the advantages and disadvantages of these types of properties. And then at the end of the day, there is the chance that maybe we use a different type of loan program to where if the home is worth it once some renovations happen, that's a thing too.
Right.
So whole different ball of wax, whole different video. Maybe we'll get into it next month. But I always appreciate your industry insight on the transaction side of it, and love being able to share what we see on the finance side.
Yeah, it's amazing, what you're getting for your dollar, but then interest rates are going to go up over this next year.
Yeah, it's no secret.
Yeah, the government said that they're going to do it. They don't always say it, but this time they have said it.
We see it happen.
Yep.
So just be prepared. Start sooner than later. Get that second opinion, whether it's us or otherwise. Start that pre-approval process, because those questions cost you nothing. to get prepared, and those options are important.
Yeah. So we don't have a crystal ball. We never know what exactly the rates are going to be. If we did, we would be billionaires somewhere else, and or in jail somewhere for.
Probably, yeah. Vegas, our name would be on the somewhere.
Exactly.
In Vegas. Yeah, we
so, what is your prediction for where interest rates are going to end up towards the end of this year?
I mean, hard to say.
Even 6 months from now.
Yeah, if you look at the expert reports on where they see them going, I think early in Q1 was mid to high threes, and maybe late was potential to flirt with fours. But again, it's relative to your down payment, the loan program, the property type, even the term, discount points or not. So that's important to touch on too. And I know it's going to be a longer video, but you can cut it. The rate that you see advertised, understand the cost of that, right?
Yeah.
Other banks, you might see 3 here and you might see 2 there. Well, what is it costing you to get that 2?
You have to get 20% down
or
to get
or
2.
the discount points, right?
Yeah.
Or the discount points. That may or may not make sense.
And that's a lot of money up forward.
Yeah.
Discount points, you're just putting more on the table up
Exactly.
front.
To buy down the interest rate. Yeah, and if you're only staying there a few years, it might not make sense. So again, understand where the numbers come from and kind of be vigilant on, okay, I see this rate, but the lowest rate might not always be the lowest cost.
Right.
Yep. So that's variable too.
So, all right. Well, that's some information to chew on, and as we move forward through this year, I still think it's better sooner than later to get the ball rolling.
I would agree.
Before they start going up and up and up even more. Obviously, we are still at record lows of inventory, so but now's the time as you get your taxes squared away to really actually see where you're at.
Sure.
So start talking to lenders to see exactly what your capabilities are, and if you're not there yet, where can you get there in a month or 2 before things get out of hand with these interest rates.
Happy to help anyway. Again, costs nothing to start the conversation. A second opinion is always valuable. Whether it's us or not, we're here to help. So.
All right. Well, thank you for the information,
yes,
and let's use that information wisely. So
you got it. Take care, everyone.
Thank you.